Hi, I'm Jimmy. In this video, we're going to look at AT&T stock, ticker symbol T. So we're going to run through the basics of AT&T's business, and then we'll dive into the big news with AT&T recently, and that is their recent deal with Discovery, their pending dividend cut, and finally, we'll see if we can come up with a fair value for AT&T stock using discounted cash flow, and ultimately see if they're worth buying today. Okay, so let's jump right in. So when we look at AT&T's revenue in 2020, well, their revenue was dominated by communications. Communications accounted for about 80% of the revenue, and this is where they count their mobile revenue, as well as their wireline and their broadband revenue. Then AT&T's smallest segment is their Latin America segment, which is exactly like it sounds. This is where they generate revenue in Latin America. That's for both services that they offer and equipment that they sell, and some subscriptions that they offer. Okay, then their final segment is their Warner Media division, and this is a segment that's really been driving the news recently. So first, we're going to focus here for a minute, and then we'll come to see how these changes are ultimately going to impact the dividend. So Warner Media has content providers like HBO, Warner Brothers, and Turner within that segment. And as we may have heard, well, AT&T recently announced a deal with Discovery regarding this division. And basically, here's what's going on with that particular deal. So just to illustrate, we're going to say that this is AT&T's business, and AT&T is moving their Warner Media division into a brand new company. And Discovery, which in 2020 had two primary segments, they had their US networks and international networks, and they're moving their entire company into the new company. Once combined, if we take just the revenues from 2020 for all of Discovery and all for Warner Media, well, this is what their new revenue breakdown would look like, again, based on 2020 revenue. And as we could see, well, Warner Media, because they're a larger division, well, they would account for about 3/4 of total revenue for the new company, whatever that ends up being called. So the good news and the theory behind this whole deal is that once these two businesses are combined, well, these two businesses will suddenly have, theoretically, many more offerings. And hypothetically, they could go up against companies like Netflix or the Disney Plus platform. Okay, so the real question is, what does each group, each current present-day group, get from the new company or from the deal in general? Well, first, Discovery shareholders, well, 100% of their business goes into the new business, and their shareholders will get 29% of the new company. And AT&T shareholders get the remaining 71%. So in theory, if we own shares of AT&T today, and we held those shares all the way through the completion of this deal, which is expected to be sometime in the middle of 2022, well, we would then, at that point, once the deal is closed, we would get shares, we would have our shares in AT&T, and we would get shares in the new company. But one important point to consider here is that since Discovery is going completely into the new company, well, of course, the new company is going to end up with about $15 billion in debt from Discovery. And AT&T is supposed to get about $43 billion from the merger happening. Now, this could be from a few different sources. First, AT&T might be able to push some debt into the new company. So in theory, if they take $43 billion off their balance sheet and move it over into the new company, it's like getting $43 billion in cash since it's now the new company's problem. Now, AT&T's management also came out and said that it's possible that they get some debt securities. So perhaps the new company issues debt, they give that debt, so AT&T would become the debt holder for the new company's debt, and then AT&T would be able to collect those interest payments, and then at some point the principal payment as well. So again, that would be an asset for AT&T, so that could be a good thing as well. And the final possibility is that the new company just straight up gives AT&T cash. So again, they could use that to pay off debt, but there's a few more question marks there. Now, I'm guessing that it's mostly going to be debt being parked at the new company. So AT&T is going to move debt off their own balance sheet onto the new company. I think that makes the most sense to me, but a lot of that I think will shake itself out over the next year while this deal is being finalized. Okay, now this brings us to the dividend changes for AT&T stock. So when we look at AT&T's dividend history, well, we can see that AT&T has consistently increased their dividends for many years. In fact, they have long been considered a dividend aristocrat. That's one of the main reasons many people invest in AT&T, because they have historically paid a very good dividend. But with this whole spin-off happening, AT&T's management has come out and said that they plan on resetting their dividend. And basically, what they said is that they plan on paying out, once the deal is complete, they plan on paying out between 40 and 43% of free cash flow, which they estimate to be about $20 billion in 2022. Now, I looked up their free cash flow estimates from analysts, and analysts weren't too far off of the $20 billion number for 2022. So I'm just going to use that in my assumptions going forward. So after the deal, assuming they brought in $20 billion in free cash flow, and they paid out between 40 and 43% of that in dividends, well, that would mean that they pay out somewhere between $8 and $8.6 billion. Now let's go in the middle there and say that they pay out $8.3 billion in dividends. Now to make that $8.3 billion dividend a bit more usable, we could divide that by the shares outstanding, and just like that, we can assume that the dividend will be about $1.16 per share. Then, that's on an annual basis. Then we divide that by 4, and that means that they should pay about 29 cents per quarter. And just to put that in perspective, if we look at AT&T's quarterly dividend chart going back the past few years, well, now when we add the assumed 29 cent per share dividend, well, we can see that this doesn't look too great for AT&T dividend investors. This is a fairly large drop-off. Now, of course, this won't be true for the next dividend. In fact, there will probably be a couple dividends before this shift happens. But either way, we can expect something like this to happen. So this brings us to coming up with a fair value for AT&T stock. And we're going to use discounted free cash flow to come up with that number. And within the press releases and announcements about this deal, well, AT&T's management team has come out and projected, or they said that their projections for revenue in 2021 would be about $26 billion. And like I already said, 2022 is expected to be about $20 billion. That's when the spinoff would happen. So we're just going to take those two numbers and use those two numbers in our projections. I was then able to find analyst estimates for the final 2 years of projections. But we discount those back to today, and just like that, we get a fair value of the entire company of $60 per share. Now, of course, we want to adjust this value because this doesn't account for debt. We adjust this calculation for their very large debt holdings, and we end up with about $33 per share in a discounted fair value calculation for AT&T stock. But like we mentioned, AT&T is spinning off a decent amount of this business. This calculation is for their entire business. Now, we know that some debt could move over, or maybe they get more cash, maybe management buys back some shares, maybe they pay off some debt. A lot of things could happen, but let's just look at a very simple version of the way it could go down and ultimately see if it's worth investing in today. Okay, so right now AT&T is trading at about $30 per share. So at first glance, it looks like AT&T stock could be 10% undervalued. Now, we also estimated their dividend to be about $1.16 per year, and then we estimated their quarterly dividend to be about 29 cents per share on a quarterly basis. Now, none of this really matters for that calculation, or at least the dividends don't matter. I just want to put it up there because I think it's an important point for us to keep in the back of our mind. Okay, now the question is, what is the new company going to be worth? Because that will essentially come out of the price of the stock. Now, I've looked at some analyst research reports from some of the big investment banks, and the estimates that I've seen say that the new company they are estimating should be worth about $7 to $8 per share for AT&T shareholders. Now, here's one way we can go ahead and test that calculation. So because Discovery is already publicly traded, and right now they have a current market cap of about $22 billion. And frankly, their stock has already had a chance to react to the news that they're going to be combined with Warner Media. So we can assume that that $22 billion market cap accounts for this adjustment. And we know that Discovery is going to own, the shareholders of Discovery are going to own 29% of the new company. So we take the $22 billion market cap, we divide that by Discovery's ownership of 29%, and that gives us a fair value of the entire company of about $76 billion. Now, AT&T is going to own 71% of the new company, or AT&T shareholders are going to own that. So 71% of the $76 billion assumed value would be about $54 billion for AT&T shareholders. Again, to make this more usable, we divide that by the shares outstanding, and we get a new company value on a per share basis of about $7.54. And this is right in line with analyst estimates of somewhere between $7 and $8 per share. Okay, now let's clean this up a bit. And let's say that the Discovery Warner Media business is going to be worth about $7.50 for AT&T shareholders. Well, on the day that the deal is completed, that part of the stock price is going to be spun out. And basically what's going to happen is that if we own one share of AT&T, and let's imagine it's still trading at $30 per share, well, $22.50 is now what our AT&T share would be worth, and $7.50 is what we'll have in the new company. That's really all a spin out does, is it's spinning off. It's not creating value, it's breaking up the current value into different pieces. Now, of course, the theory behind creating a new company with Discovery is that perhaps that company by itself would trade at a better multiple, something like Netflix does. And if it traded at a Netflix-like multiple, well, then that company in time would be worth more, and AT&T shareholders, in theory, could benefit. And that is very possible. Now, of course, this would also mean that the AT&T shareholders are now left with a lower dividend payout. And if we bought shares today, assuming that assuming we paid about $30 per share, the stock stayed about the same, we paid $30 per share, and the dividend did in fact drop to the $1.16 per share, well, that would mean that our dividend yield would be about 4%, a little bit less than 4% on an annual basis. Now, if we opted to wait for the business to get spun out, so we're waiting for after the spin-off to happen in 2022, well, at that point, with the lower dividend payment, well, and the lower stock price, well, we would be earning, our dividend yield would be slightly over 5%. But in that case, we've now waited to buy the shares, so we do not get a piece of the new company, which is very, very unlikely to be paying a dividend. So we don't want to really account for that. So this brings us to the question, do we want a piece of the new company? And do we want to buy AT&T now, or do we want to wait to buy it? Ultimately, what do we want to do? And for me, I actually have a couple issues with AT&T right now at this point. First, the fact that they dropped their dividend as much as they did, I thought it was in poor taste. They really took advantage of doing this spin out to drop the dividend a lot. They did not drop it proportionally. They spun off a decent amount of their business, sure, but they dropped their dividend by more than that. And this bothered me because a lot of investors, many investors, buy AT&T stock just for their dividend. And many of these people are retired and need these dividend payments. These dividend payments are getting way reduced, and now these people have to go out and find another way to earn that kind of dividend yield. And as a potential investor, in my mind, that breach of trust is a very dangerous thing for management to do. And along those same lines, the next consideration one of my fears with AT&T is the fact that we're not really too sure how their debt situation is going to shake out. I would have felt much better about this spinoff if AT&T's management came out with a detailed plan. Here's what we're doing. Here's what we expect. Here's the target goals. Here's what we're doing, how we're curing the debt, how we're getting rid of a lot of the debt that we have, because they have a ton of debt. If I remember correctly, it's slightly over $200 billion in debt before the spinoff. I'm sure some of it will go over there. But either way, the fact that so much of that is left up in the air, I think it's in poor taste. Now, on the positive side, I actually think that this spinoff makes AT&T a more lean and, in theory, a much more efficient company. But for me, I have no interest in owning them here, or at least not until after the spinoff happens. Perhaps buying the stock at a lower price, even getting a lower dividend yield, I'm fine with that because there's so many unknowns. I want a lot of this stuff cleaned up before I would be willing to jump in to take a shot on management that in my opinion, hasn't really earned it yet. And I'd love to see an official announcement on what their new dividend will actually be. Right now, it's based on estimates of free cash flow, and there's a lot of giant assumptions happening there. So I'd like to see for them an actual, here's what the next quarter dividend will be once the spinoff happens. Now, if you're curious why AT&T's stock price hasn't moved really anywhere up and down, but it's in about the same spot as it has been for the past few years, well, it's actually all about their dividend. And I actually did a whole video where I talk about how dividends actually work, how they affect their stock price, as well as some strategies that people try, or many dividend investors try. So if you like dividends, perhaps that's a good next video for you to watch. I got a link right here. I got a link in the description below. And thank you so much for sticking with me all the way to the end of the video. I really appreciate it. Thank you, and I'll see you in the next video.